Welcome to our second edition of our podcast series here at Remax Evolve. Today we're very excited to be interviewing our regional manager for Betterbond, Robert Murray. And in terms of our association with Betterbond, it really allows us to become that one-stop shop for our clients, for their convenience, allowing them an opportunity to have everything at their fingertips for the home buying experience. Robert, great to have you with us today. Thank you for your time.
Thank you so much, Candice, and congratulations once again on your amazing award at the Remax Convention.
Thank you, Robert. I appreciate that. So I reckon let's start off easy today. Why should someone choose to work with a mortgage originator instead of going directly to their banks? I know there's a lot of misconceptions around that.
So we always like to use a story that we've used for many years. If you consider someone who is looking to purchase maybe an airplane ticket, whether it be local or international, a lot of people go around and they do a lot of shopping around for the best air price. When it comes to your biggest asset being a property purchase, why not do the same? So you go to your own bank, you get one offer. With using a bond originator like Betterbond, we're able to go out and we farm your deal to the proper banks and get you the best deal. So we negotiate the rates, we negotiate the best transaction for the customer. Our services are free, and all our bond consultants come with extreme experience to structure a deal which is best suited for the customer.
Love that. So ultimately for the client's best interest, you're fighting for them. So Robert, could you share with us a little bit about Betterbond's history, where they started, what the vision is, what your objectives are as a company?
So I think I need to go back to right in the beginning when Rudy Botha started Betterbond. He had a video shop. Our first offices were actually his office in a video shop down in Durbanville, Cape Town. And our second office was in a Zozo hut, believe it or not, on a property. And over the past 25 years, we've grown into a company with a staff complement of over 600 people, which includes all our partnerships within the business. And we've grown in leaps and bounds, and it's so exciting. We look forward to 2030, which is our next big goal that we are all working towards. We've introduced so many products and our technology has grown leaps and bounds, and we're going to take this market. Our vision is to be the provider to make sure and house as many South Africans as possible.
I love it. And it's amazing how all these success stories always starts in a Zozo hut or a garage.
100%.
And how it just, again, with the vision in place, how you just exceed expectations. So Robert, thank you for sharing that with us. As property professionals, we help navigate a client's most prized possession, as you said earlier, the investment of a home. Now, on everybody's lips more recently there's been quite a fluctuation and change in interest rates over the last 5 years. Would you mind sharing with us your take on what's actually taken place in the last 5 years with regards to interest rates?
So we have to look at the past 5 years. We think of 2020, we were all struck with COVID, which had serious consequences for a lot of people. But one of the most positive is that the interest rate dropped to a all-time low of 7%, which gave the opportunity to a lot of first-time home buyers to get into the real estate market. Unfortunately, due to the economic climate, the interest rates went up to 11.75, and we've seen a gradual drop again. We're now currently back at 11%, and due to chats that I heard earlier this morning, it does seem that the interest rate will drop further at the next monetary meeting. So hopefully we'll start seeing the interest rate going to closer to the 10%. I wish I had a crystal ball that I could tell you exactly when that was going to happen. But if we keep seeing the interest rate drop, even if it's at marginal 0.25, we'll see a lot more activity in the marketplace. And I believe that we're in the right direction for that. The rand is strong at the moment, so there's a lot of good positive things happening within our country to get that positivity back in the property sector.
Agreed. And that's what we're all crossing fingers and toes for.
100%.
But I tend to agree with you. I wish we all had a crystal ball, because I know that our last few predictions have not exactly gone according to plan, but certainly heading in the right direction.
Definitely.
Now, Robert, what I'd like to ask you is to share with our listeners, there seems to be the misconception around what we've experienced, where we're currently at with our interest rates. Historically, over the last 20 or 30 years, where do we fall in relation to what our average has been over that time period?
So if we go back, we look at 1984, our interest rates skyrocketed to 25%. And that was the peak of the market. I don't think anybody ever thought that it could go any higher. Then in 1989, the interest rate went to 25.5%. And that was the era when I went into home loans. And
lucky you.
Yeah, lucky me. And you know what, it was a challenge, but you know what, we still did business during those times. And there was a lot of overseas lending that was happening. Our rand was really, really weak. And it was a move, and I believe at that point it was the right move to stop lending and rather start saving. And it did help us in the long term. And if we look at the interest rates from 1989, we haven't seen those high rates again. We've had the 7%, we've had the 15%, and we're in the right direction. Once again, reckless lending is a huge factor. Inflation, the weakening of the rand. So we don't know, we don't have that crystal ball. As I said, we don't know what happens in the future. But currently, right now, property is a good investment in terms of your interest rate, and I doubt that we'll ever see 25.5 again, in the next 20 years. So holding my breath and saying that, but definitely the average rate, if we look over the last 30 years, it's been about the 14%, the 13.5 to 14%. So it's still marginally lower than what we've experienced in the past 20 years. And I do believe that we'll see the rates to remain below the 11% after the next rate cut is announced.
Fantastic. So, I mean, when we look at it historically, you said 13.5 to 14% is historically what our average has been.
100%.
So in fairness, where we're sitting right now is still traditionally a lot lower than what we've experienced.
100%.
Am I correct in saying that, what we need to factor in, and as the public, as the community, we need to understand that what happened through COVID was quite a unique situation. Where we feel like it's gone up astronomically, but in reality it's only gone back to normality, and in fact still, even with that happening, below the average. Would you agree?
I totally agree with that. I mean, I don't believe that 1971 our interest rate was 4.5%. There's been a lot of changes, within the industry. And as I said, 13.5, 14% was the average over the past 20, 30 years. We're on a good wicket if we're currently at 11%. And as I say, there's still a good segment of the market that are saying at the next rate reduction, we'll see another 0.25, which is great.
Brilliant. So last question around interest rates, Robert. For those navigating the journey of fluctuating, changing interest rates, what piece of advice could you share with them?
So I think it's very good that when the banks actually do an assessment on a customer, so although the interest rate is currently 11%, we always do a little bit of a buffer check when we're doing an affordability of the customer. So the last thing that we want to have is if the interest rate should go up to a 13%, that we see a lot of people and customers not being able to afford their bonds. So when they do an assessment on a customer, they always work on a stress factor. So at the current interest rate 11%, the banks are usually assessing the customer at an interest rate of 13%. Just to give that little bit of a gap, so that should the interest rate go up, that the affordability is still in line for the customer. So it does give that little bit of a breathing space. Obviously we negotiate to get the best deal for the customer. The banks are also very good, should a client get into trouble, they're there to assist, but we're not here to focus on the negative. We're here to grow property portfolios and allow people to get into the property market. So, and that's happening right now. We've seen a tremendous growth, you know, in property sales and in terms of the bond approvals coming from the banks. So the property sector currently is extremely positive. I believe it'll even get even more buoyant once we have the next rate decrease. And yeah, definitely business there to be done. And the banks are very keen and active in granting bonds at the moment, which is just fantastic.
Yeah, when the appetite's there. And I can confirm that even from our perspective, we certainly are seeing the interest and the inquiries that are coming through. There is definitely a more positive sentiment involved. So changing direction ever so slightly, in terms of where we're working, you are looking at a region of hundreds, if not thousands, of bond applications on a monthly basis. What kind of stats are you seeing coming through for the Gauteng North region currently?
One thing I will say, and it's been a very statistics that have been picked up, and we measure it year on year. In this area specifically, we've actually seen a good property price increase of 5%. So, you know, we take an average in the area. So currently we're looking at approximately 1.675, and which is great when you think of 2024. You know, we were really on a downward trend. And so that 5% growth in the 2025 is really great for the people who are selling. And we've also seen that the first time market, their average purchase price is now sitting about 1.3 million. It's still very stable for the first time home market. We haven't seen big growth there. It sort of remains stable, but definitely sales are happening. Prices are starting to increase. 5% is good in our area. Will we see 10% like what we experienced many years ago? We'll wait and see, but at 5% is a good growth rate for our area currently.
Yeah, I think it's phenomenal, especially considering where we came
Where we've
from.
been.
So Robert, in terms of first-time home buyers, you mentioned them now in your feedback. What do you see the trends happening there in terms of where the sweet spots are within our region?
So definitely your sectional title properties are your sweet spot for your first-time home buyer, especially single men or women, or a husband and wife, you know, so they're looking something that is lock up and go, that they can get on their bikes, go to the cradle at the weekend and, you know, play paddle and things like that. So quick lock up and go. Most definitely, once the family starts being introduced or the family comes along, then you'll start seeing them moving into, you know, your freehold properties. But once again, they're looking at a secure complex living. So gated communities, cluster homes, where there's a little bit of a garden, etc., but they also have their own freedom.
Okay, fantastic. So switching gears yet again, a bond originator, working with you as opposed to my private banker, directly going to my bank. What do your services cost the end user, being myself, the client?
So a lot of people don't believe me, but our services are free.
Where's the catch, Robert?
There's no catch. No added cost, no additional fees. Our services are free.
And the beauty about it is, and again, having this partnership for a number of years and working very closely with Betterbond, is ultimately allowing you to be in a position as a client to have one application that gets submitted to how many different financial institutions?
8.
8. So one application, so the ease of that, no cost to me, goes to 8 different banks, and then ultimately fighting for the best interest rate.
Most definitely. So obviously we always look at the client's profile, obviously, to see where their banking relationships are, and we won't always go to all 8 banks, but we will do our best to get the best deal, best terms and conditions. That you'll be dealing with a consultant that knows the market, knows the industry, has years of experience in home loans, whether it come from a banking sector or from a origination firm. We also have a private banking suite as well that we can offer, where it could be structured lending that needs to be done for the customer. So we do offer that service as well.
Fantastic. And again, ultimately making it consumer focused.
100%.
Where I feel almost going to the bank directly, and correct me if I'm wrong, I'm the novice in this scenario, but you're sitting in a situation where that bank has its own vested interests, where as a neutral party, as a bond originator, applying at all the various banking institutions, you've got the consumer, the clients
At heart.
at heart.
100%. With everything that we do, we need to ensure that our client is at the heart of everything that we do. Whether it be a business relationship with our partners or with our customer, we need to do everything with heart, and it's the best option for the customer.
Love it, love it. So that's 100% in line with what we believe here at Evolve. So Robert, in terms of pre-qualification, it's something that we encourage our clients to work with because it really gives them a certain amount of power. What are your thoughts around pre-qualification, and to dismiss some of those myths around pre-qualification? What does that process look from Betterbond side?
So I think we need to have an understanding in terms of a pre-approval and a pre-qualification. So a lot of people can go onto a site, they can put in their gross income, and they think they've been pre-qualified. No, it's not the case. Because when we do a pre-approval for our customers, and our strike rate in terms of our pre-qualification is currently at 95%. So what we do is we look at, number one, the client's history, credit history, see if there's any defaults, judgments, any trace alerts, any unpaid accounts. Then we do the assessment in terms of income, and then we assess the affordability of the customer. So we use the old myth, 30% of the gross income can be used again for a bond installment. However, what is the affordability of the customer at the end of the day? And the reason why we drive pre-qualifications is to make sure that the client is looking at the correct price property. We have the perception that we can purchase a property at 2.5 million, 3 million rand, but when we get down to the nuts and the bolts, we can actually only qualify for 2 million. So it's to give guidance to the customer, the consumer. This is based on your affordability, this is what you can afford. Look at the property in this price range, and they have a smooth transaction. I think a lot of people, there's been maybe negative feedback, why do you want to do that, you know who I am, that sort of attitude in the marketplace. But at the end of the day, we're here to offer a service, and you don't want to give a disservice to, at the end of the day, the agent, and also there's a seller in that chain of action that you don't want to disappoint because we're unable to get a bond approval. If we had done the homework up front, the transaction would have been 95% secure.
100%, and you've touched on a few very, very pertinent points. In terms of the pre-qualification, how does that obligate the purchaser?
So there's no obligation. You've done that pre-qualification, it's valid for 90 days. You can use it, you don't use it. We find a lot of people are just interested, what can I qualify right now? But I might be getting an increase in 2 months' time. We can redo that pre-qualification at any point, if there's any changes in the income. But and as I say, people are just interested. What can I qualify for?
Sure.
But at least taking a possible buyer to a property, they've been pre-qualified. You know exactly what their credit looks like, and their affordability is there to go into an agreement of buying a property.
For sure. And would you agree that really at the end of the day, it empowers the buyer?
Most definitely.
Because they know what they're working with. But certainly what we've experienced from our side of the fence is it allows you an opportunity that if you are interested in a property and you do want to submit an offer, that now all of a sudden you're sitting with a pre-qualification as opposed to an offer that doesn't have a pre-qualification. It just gives you that extra oomph that you need. Would you agree?
I agree. So you need to be the hero in the transaction. So you've now got your offer, you're going to your seller, you've got the asking price, you've got a pre-qualified customer, your deal is virtually done. All it is signing the offer to purchase, getting it accepted, and we'll finalize the bond and everybody's happy. So we want the agent to be the hero in the transaction.
And at the end of the day, everybody wins because it's a
100%.
win-win across the board. So, Robert, you've shared some very, very useful insights over the last few minutes. I want to ask you, when you're dealing with a scenario of, I have got some extra funds available on a monthly basis. I've got a home loan, but that home loan's over a 20-year period. But I've got an extra 1,000 or 2,000 rand spare every month. What are some of the benefits of putting that extra finance back into my monthly bond repayments?
So I think the people need to, and the public needs to understand that anything that you pay into your access bond, which is over and above your monthly debit order, is automatically deducted off the capital amount. Now the banks work on interest, obviously, because that's how we do our business. But anything that's paid into the bond account over and above your monthly installment is automatically paid off your capital amount, reducing interest, reducing your loan term.
So again, misconception perhaps, but I've heard it can sometimes save you 5 to 10 years on your bond repayments.
100%, especially if you're maintaining it on a monthly basis. You know, we also see a lot of people that when they get their tax money, they put it straight in. You know, if you're fortunate enough, or people getting bonuses, etc. They're putting that money straight into their bond account, their access bond. So it's a safety net. It's like savings. You can draw it out of the bond account should there be an emergency that you need to pay for. But for the period that money is sitting in your bond account, you've reduced your capital, you reduced your loan term, and you're reducing the interest, the overall interest on the bond.
I love it. So it's almost a no-brainer.
100%. It's a safety net. Safety net, sorry.
So again, Robert, in terms of Betterbond and our association with Betterbond, what are some of the new exciting features that the public, the community can look forward to from Betterbond's side?
So as you know, we've introduced our DigiApp link to assist our customers with the pre-qualification process. So it's simple, no forms to be completed. You can do it using your mobile phone. We're looking now to introduce our BetterID to assist the agent and also the attorneys with their FICA documentation. We really can't wait for that one to be launched. We have Amplify to help our agents with regards to advertising using AI technology. And we've introduced Ruby to assist our agents with subject to offers, to waive the subject to clause in the agreement. And there's a lot more coming in the next couple of months.
Right?
All I'm saying is watch this space, but there's a lot of exciting things happening in our market.
That's amazing. You know, to be involved with a company that is so progressive and constantly pushing those boundaries. I mean, I will admit, being middle-aged, yes, we'll leave it at middle-aged, I'll probably need my 13-year-old to help me with some of those, but the ease and convenience that's involved with now just quickly using an app to be able to be pre-qualified is certainly a step in the right direction.
And I think what we also did, we wanted to know from our real estate partners, you know, what would help you in your business. So we've designed product that's going to enhance your business at the end of the day.
Love it. And indirectly, or directly for that matter, again, providing the best possible solution to the client, which is always at the core of everything we do. Wow, Robert, you've given us a treasure of insights today. I cannot thank you for your time enough.
Thank you for your time.
It really has been insightful, and hopefully we've been able to share some useful tips for our clients and the community out there. Thank you for your time. Listeners, we hope you found this useful, and we look forward to our very next session. Robert from Betterbond, our regional manager, thank you again for your time.
Thank you to you, Candice. I appreciate the opportunity.
Take care.